All right, welcome to TalkTickers. We're jumping right into American Superconductor Corporation, AMSC. We're going deep on their latest earnings call, covering Q4 and the full fiscal year 2024.
Yep, we've gone through it all. We'll give you the key results, the outlook, basically everything you need to know.
So let's start with that snapshot, the results, and honestly, pretty strong.
Oh yeah, definitely strong. Q4 revenue for fiscal 24 came in at $66.7 million.
Okay.
And that's up 59% from the same time last year. So some real acceleration there.
Wow, 59% in a quarter, that's significant. And the full year?
Full fiscal year 24 revenue hit $222.8 million. That's a 53% jump year over year.
So consistent growth through the year.
Exactly. And it pushed their quarterly revenue over that $65 million mark for the first time recently. A nice milestone.
And it wasn't just revenue, right? Margins look good too.
They did. Full year gross margin was 28%. That's up from 24% the year before.
Okay, so a 4 percentage point improvement.
Yeah, 353 basis points, so just over 3.5 percentage points. A really solid expansion.
Nice. And profitability, that was a big story, wasn't it?
Huge win for them this year. Third straight quarter of GAAP profitability.
Okay.
For the full fiscal year 24, GAAP net income was $6 million. That's 10.16 per share.
Which is a big turnaround from the loss they had in fiscal 23.
Exactly. And then if you look at non-GAAP, which, strips out some of those one-off items.
Right, gives you maybe a clearer picture of core operation.
Yeah. Full year non-GAAP net income was $24 million, or 2.65 per share.
And how does that compare?
Well, fiscal 23 was just $0.6 million, or 2 cents per share, so a massive improvement.
That's incredible.
And this was their 7th consecutive quarter of non-GAAP profitability.
So consistency building there. What about cash flow?
Also positive. Q4 operating cash flow was $6.3 million. And for the full fiscal year, $28.3 million generated from operations.
Okay.
They ended the year with $85.4 million in cash, cash equivalents, and restricted cash.
And that positive cash flow streak.
Also 7 quarters running, 7th consecutive quarter of positive operating cash flow.
So you look at all that revenue accelerating, margins up, profit, cash. It really feels like things are clicking for them.
Yeah, the word management used was resilient, hitting an inflection point. These numbers seem to back that up.
Okay, so where did the growth actually come from? Let's break down those segments.
Right, so in Q4, the grid business was definitely the powerhouse. $55.6 million in revenue.
And growth there.
Up 62% year over year. Huge jump.
Wow, and wind.
Wind also grew. $11.1 million in revenue. That's up 42% year over year. Smaller base, obviously, but still solid growth. And
for the full year, how did that split look?
Full year, grid was $187.2 million, also up 53%. And that made up 84% of their total revenue.
Okay, so grid is clearly the main engine.
It is. And management said that growth was a mix, partly organic, their existing new energy products doing well, and partly the contribution from NWL, the acquisition.
Got it. And the wind side for the full year?
$35.6 million, up 51%, so roughly 16% of total revenue.
And what was driving that?
That was really about shipping more of their electrical control systems, the ECS units, mainly to I-MAK in India for their turbines.
Okay, let's talk orders. That seemed like another bright spot.
Oh, definitely. Q4 orders really accelerated. They booked $75 million.
$75 million in one quarter.
Yeah, and for the full fiscal year. Almost $320 million in new orders booked.
That's a lot of business coming in the door.
Yeah.
How does that translate to backlog?
Well, they ended the year with a 12-month backlog over $200 million.
Okay.
Which is way up from $140 million the year before.
So strong visibility.
Yeah, and they even mentioned that orders are coming in so fast, some stuff is now being booked for delivery out in fiscal 2026.
Wow, okay. What about spending? Costs must be up with all this growth.
They are. R&D and SG&A, so operating expenses, were $15.6 million in Q4. That's up from $10.3 million a year ago.
And for the full year?
$54.5 million compared to $39.6 million in fiscal 23. So yeah, a noticeable increase, but likely necessary to support the growth and integrate NWL.
Makes sense. And looking forward, what guidance did they give for Q1 of fiscal 25?
They're projecting revenue between $64 million and $68 million.
Okay, so roughly in line with the strong Q4 they just had.
Pretty much. And they expect to stay profitable. GAAP net income guided to exceed $1 million or 3 cents per share.
And non-GAAP.
Non-GAAP net income expected to be over $4 million or 10 cents per share.
So continued solid performance expected.
Yeah, management sounds confident. They kept saying they feel the company is in its strongest position in over a decade.
So August in a decade. That's a bold statement.
Well, they feel they've built a more resilient company capable of handling bigger volumes for repeat customers.
And they put that growth in perspective, didn't they?
They did. It's kind of amazing. Back in fiscal 17, their annual revenue was under $50 million.
Under 50.
Yeah. It doubled by fiscal 21, then it doubled again by fiscal 24. Just ended.
So doubled again in about 7 years.
Exactly. And now, like we said, their quarterly revenue is higher than that entire fiscal 17 annual number.
That really paints a picture of transformation.
It absolutely does.
Okay, let's shift to the future then. What are the big growth drivers, the tailwinds they're seeing for fiscal 25 and beyond? This is where you really see the strategy.
For sure. Semiconductors was a huge topic. They talked about significant order acceleration.
How significant?
Management used words like huge pipeline, potentially a triple-digit opportunity for them.
Triple-digit million.
They weren't super specific on the time frame for that potential, but the implication was, yes, a very large opportunity. And it's global, not just the US GPS Act stuff.
Okay.
They're seeing order sizes grow too. Minimum $2 million per fab now, but they see potential for single fab orders hitting $10 million, maybe even $15 million plus down the road.
And this is all tied to new semiconductor factories being built.
Exactly. All that new fab construction needs the kind of power quality solutions AMSC provides.
Makes sense. What else? Traditional energy came up too, right?
Yeah, kind of a resurgence there. It drives industrial growth, but also puts more strain on the power grid.
And AMSC plays across the board.
That's what they emphasized. Upstream, like drilling, midstream pipelines, compressor stations, downstream refining. Their tech helps manage power issues, boost productivity in all those areas.
Okay. And data centers. That feels like a newer focus for them.
It is, but they've already secured orders. And you know how fast data centers are growing? The power demand is just exploding.
Right.
So AMSC is seeing direct demand for things like capacitor banks, harmonic filters, StatComs, basically, sophisticated gear to keep the power clean and stable for these power-hungry facilities.
They need reliable power more than almost anyone.
Absolutely. They mentioned a stat, I think data centers might double global power demand by 2026, something crazy like that.
Wow. Okay, so semis, traditional energy, data centers. What about utilities?
Still important. They're seeing activity moving beyond just single isolated projects. Utilities are focused on making the grid more resilient overall.
Supporting the energy transition, maybe.
Yeah, that and dealing with disturbances as old coal or gas plants retire. Plus, reinforcing the grid to handle big new industrial loads like mining operations.
Got it. And defense. That's been a steady area for them.
Still is. They highlighted expanding into allied navies. Big win with the Royal Canadian Navy, multi-year, multi-unit deal worth around $75 million for their ship protection systems, the SPS.
$75 million from Canada. Nice.
Yeah. And they're still delivering for the U.S. Navy's San Antonio-class ships. Delivered 3 out of 5 systems. 4th one expected soon.
And they're pushing this to other allies, too.
That's the plan. They really stressed it's a differentiated solution, proving performance.
Okay. And we can't forget wind, even if it's a smaller piece now.
Right. Still growing year over year. That's mostly I-MAK in India, ramping up production.
Yeah.
Demand for AMSC's 3-megawatt ECS, the control system, is actually higher than what they can currently deliver to I-MAK.
Interesting. So potentially for more growth there if they can meet demand.
Seems like it. They got almost $35 million in orders from I-MAK in fiscal 24, shipped about half. They mentioned doing more short-term orders now to be flexible for I-MAK, which is why the win backlog number might look a bit lower in the 12-month figure.
Ah, okay. That makes sense. Focus there is still India and Europe.
Yep, primarily India and Europe for wind.
So stepping back, it sounds like they're really trying to position themselves not just as wind and grid anymore.
Exactly. They talked about providing specific control solutions for customers across all these different industries. Less about silos, more about integrated offerings for specific needs, not just cross-selling, but really integrating.
And operationally, what are they focused on? Manufacturing, supply chain?
Focus seems to be on learning, getting more efficient as they scale up, and keeping their sourcing flexible, managing costs, managing pricing.
After that big margin jump in FY24, are they expecting more?
They said they achieved significant expansion. Now the focus is more on incremental improvements going forward.
Okay. They also mentioned some strategic advantages, right? Like their U.S. focus.
Yeah, they highlighted that. About 70, maybe 75% of their revenue comes from the U.S. They see that as a hedge against, shifting trade policies or tariffs.
Interesting point.
And also the diversification into industries like defense, semis, data centers, these tend to be more recession resilient. Big funded projects keep going. Plus, they emphasized having a strong domestic supply chain.
Did they give a sense of the future business mix, like percentages?
They gave a rough breakdown. Yeah, sort of a high-level target mix.
What would that look like?
Roughly 25% materials. That includes stuff for semis, industrial chemicals. Another 25% from traditional power generation applications.
Okay.
Then about 25% from renewables, mainly that India-Europe wind focus.
That leaves another quarter.
Right. Split between military, maybe 15%, and utility, maybe 10%. But they noted that utility piece could grow more, especially with data center demand feeding into it.
So a much more balanced, diversified picture than maybe a few years ago.
Definitely. Built for more stability, targeting these specific, high-growth, resilient markets.
All right. Let's shift gears now. Time for our not financial advice segment. This is purely about exploring possibilities, thinking about scenarios based on the call. Absolutely zero recommendations here.
Yeah, think of this as just brainstorming, looking at the commentary and thinking, what if? Purely speculative for discussion purposes only.
Okay, so here's an outrageous but maybe plausible idea. Going long AMSC.
Okay.
The thesis is basically betting that this surge in semiconductor fab and data center projects pulls through demand for AMSC's power solutions way faster and bigger than anyone, maybe even AMSC themselves, currently expects.
Right. Betting that the current backlog conversion rates and their guidance are too conservative given the scale of these projects.
And the justification, you pull it right from the call. Management saying the pipeline is huge, talking triple-digit potential.
Order sizes per fab going up, potentially $10, $15 million plus.
And crucially, saying they have direct demand now from data centers. And these aren't just ideas, they are real funded under construction projects.
So the bet is that these massive multi-billion-dollar projects that absolutely need the kind of reliable power AMSC provides create this overwhelming demand wave.
Exactly. A wave so strong it pushes AMSC's revenue significantly higher than expected, maybe even boosts margins unexpectedly if they handle the scale well. That's the outrageous part, betting on upside surprise.
And the idea is if the market hasn't fully priced in just how fast and big this demand from semis and data centers could hit,
then that potential surprise could lead to a major re-rating of the stock, people suddenly realizing the earnings power is higher than they thought.
So the core speculative question is, are these tailwinds underestimated? Could they drive faster growth than baked into the current view?
Purely a thought exercise, not investment advice. Please do your own homework.
Always. It's just one potential narrative based on the call's themes. Understand the risks before doing anything.
Okay, so wrapping up this deep dive on AMSC's call, key takeaway. Fiscal 24 was strong. Record revenue, consistent profit, good cash flow.
Yep. They built a solid order book, backlog is up significantly, and they're making real progress diversifying into these high-growth, important sectors, semis, data centers, traditional energy, military.
Management sounds upbeat. Guidance for Q1 looks solid. They genuinely seem to believe this is their strongest position in over 10 years.
And you can see why. They're sitting right at the center of some huge trends. Modernizing the grid, the energy transition, industrial expansion, defense priorities.
Just a reminder for everyone listening, this summary was for informational purposes. It is absolutely not financial advice.
Investing involves risk. Please, do your own research. Consider your own situation.
So, as you think about everything we discussed, maybe consider this. How might these big trends AMSC is tapping into semis, data centers, grid resilience, ripple out and affect other parts of the economy, other companies?
Yeah.
What does this deep dive make you think about?